So can you see my screen?
Yes, ma'am.
Okay.
Yes, ma'am.
Okay, right, thanks. So today we are going to continue the second part of the last lecture, which is the legal framework. And today we are going to talk about some of the laws. There are many laws that are connected to payments and settlements. Some of the laws that are indirectly relevant to payments and settlements, but they all support the efficient functioning of the payment systems. So that is what we are going to do today. So this is where we are in the course structure. So we are still here. Last time also we were doing the first part of this. As always, feel free to ask any questions. Since there's just like a few of us, you can have a very comfortable conversation as we go along. Yeah, so we'll be taking a break as we go, but we started a little late. So let's see when we want to take the break. The last lecture, we looked at Monetary Law Act and the Payments and Settlements Systems Act, right? So those two acts are directly governing payments and settlement systems in Sri Lanka, right? They are the main two acts that govern payments and settlement systems, and all other acts related, laws that are directly related to payments and settlements come from those two laws, right? Today we are going to talk about the others. There are many others that enable digital payments in Sri Lanka, and even in the world there are. It's a combination of many laws that come together, right? So yes, last time also we had this slide, and we covered these two areas. That's why they're in gray. So today we are looking at these other laws. And the reason that I brought this slide in again was because, so I put these sort of clock wheels for a reason, because they all have to work together. If one doesn't work, then the others get stuck. So you can't, everything needs to work together, especially for digital payments, because when we talk about digitalization, there's a lot of intermediary functions that have to be performed to make sure the payment goes through and the money goes from the sender to the hands of the receiver, right? So to enable that, only a single act, it's very difficult for a single act to enable all of that, right? So you will have other general acts. So now, if you take Anti-Money Laundering Act, it applies to all financial services. But because payments and settlements is sort of the core of financial transactions, that will apply here as well. Or electronic transactions. Then we have cybersecurity, crime related. Then we even have the evidence ordinance. So all those directly impact the payments and settlement systems, though they are not sort of payments and settlement systems dedicated acts, right? So yeah, last time also we had this slide and we covered the first two acts. Now today I'm not going to go very deep into these acts, right? And the reason that I am not going to go deep is that the purpose of this course is not to teach you all the laws that are relating to financial services, right? Because as you can see, it's a very wide range. So if you want in-depth knowledge, I think IBSL and even CBS has, that is the Center for Banking Studies, they have dedicated laws related to financial services courses. And I think it's better if you take those, because then you can get a very in-depth knowledge of these areas. But for the purposes of this course, which is digital payments and fintech innovations, I am going to talk about how these acts relate to payments and settlement systems, right? So we have the Banking Act, which is 1988. Then we have the Bills of Exchange Ordinance, which is a very old act, 1927. We have the Treasury Bills related acts, which is in 1923 and 1937. So just keep in mind, these are all before the central bank came in, right? So this is something I've always been saying throughout the course, which is the most of the time the market function comes first, and when it needs to get regulated, the regulation comes in, right? So until some market failure or some anomaly, some crime, or some issue starts coming in, or let's say there is an income involved, and the government wants to collect tax or something like that. Unless some friction happens, generally actions will go unregulated and regulated by common law, like contract law and other common law obligations. They will just continue, right? Because there is a general accepted law of the land and practices and customs, and you will follow it like that. It's only when issues start arising that we have legislation coming in, right? And then we have the AML and CFT related laws. And you all are from the banking industry, so you must be very well aware of these. Then you have the Electronic Transactions Act, which is very, very important for digital transactions. And then I'm introducing a new act. I don't know if you have already heard of this, but we are planning to bring in a data protection law, introducing a data protection law to Sri Lanka. And this has been in the drafting process from it started around late 2019 and through 2020 as well. And now we are in the final stages, so there's a high likelihood that it may get passed in Parliament this year, right? So I will just introduce those concepts, because that will really change the obligations that every institution, including banks, will have towards personal data, that is customer data or any individual's data. So it will have a big impact on all the institutions. So it's important that we know this in advance, right? So the Banking Act. So we have two bankers with us. Do you, on your day-to-day work, do you encounter any provisions of the Banking Act directly? Do you use it? Do you have to quote it, or do you have to look at it on a day-to-day basis?
Of course, under that account, only that we have got the license.
Yeah. Yeah. So at an operational level, do you use it? Is there any purpose for you to use it at an operational level?
Of course, we have to comply with the central bank guidelines. That also made mandatory by the Banking Act.
Yeah. So the Banking Act, so you may not be opening the act every day, but every day you will be your bank. The things that you do within your bank will most likely be something connected or regulated uh, through the subsequent regulations or directions or circulars, everything coming from the Banking Act. It's a very, very wide act. And as you mentioned, it is what sets up the banks, right? So it provides for the licensing of commercial banks and specialized banks. And then it provides for the prudential requirements, supervision, accounting, disclosure requirements, procedures on how the bank has to deal with from the time it starts, from the up to the time that it winds up, and most banks, I mean, very rarely we see banks winding up. And the responsibility of making sure that banks abide to these laws and regulations is vested with the central bank, right? And then if we go to Schedule 2 of the Banking Act, it will state what functions that the banks can carry out, right? So it's obviously a very broad act. It has a lot of rules and very detailed. So the interesting thing about banking is, I think if you follow the principles and everything that has been given to you, there is a good chance you can automatically have a successful bank to a certain degree. So because it's regulated and because the area is so systemically important, and the banks are uh, holding the public money, the regulation will very easily reach almost every corner of the banking operation. Am I correct if I say that? Where almost every aspect of the banking operation is touched
Yes.
by some regulation. Yes,
Yeah.
mainly from the Banking Act. So so if you follow the regulations, there's a good chance that you can, to a good extent, run a successful bank without trying to sort of rock the boat or anything like that. If you just follow that, also there's a good chance, because the prudential requirements are there, it's supervised, and the central bank gives recommendations and all of that, and it tells you how to do everything. So there's it can be a good guidebook as well, I feel. So that's the Banking Act. And then I'm going to just introduce the Bills of Exchange. So Bills of Exchange is it's not related to the electronic payments and settlement systems, in the sense it doesn't set up an electronic payments and settlement system. What this is for is the instrument, right? So just the way the Monetary Law Act will also introduce money, which we are all using, the Bills of Exchange introduces the payment instruments that we use in the check clearing and image truncation system, right? So what relates to checks and bankers drafts are all governed by the Bills of Exchange, right? And I think I told this in the previous lecture, which is that this is a very old act. So it's not a central bank act, and it's sort of, if you read it, it reads like just a sort of odd general law act. And therefore, if there are any issues with checks, it goes, I mean, the dispute resolution mechanism uh, is directly there. You don't have to come to the central bank when there's a dispute, right? And of course, with SITs being introduced, the PSSA has some sections that broadens the provision of the Bills of Exchange to enable electronic presentment, right? So the PSSA, that which is the Payments and Settlement Systems Act, it is for electronic presentment, not for electronic checks as it. It's just to present, right? So then we have the treasury bills and treasury bonds related acts. And so why are these coming in? Because they are used in our settlement system. So the final cash settlement happens in the RTGS system, right? And but of course, the primary dealers who can join the RTGS system, they get appointed through these acts, and their regulations and responsibilities are all dealt with through these acts, right? So this is why these acts become important. And then for the securities accounts, which are held for scriptless securities, that is in the Payments and Settlement Systems Act, right? And then we have the Foreign Exchange Act. Either of you have worked in remittances related areas? or any foreign currency related transactions related areas.
Not remittances, but we handle foreign currency accounts. So thereby we need to abide by the foreign exchange regulations.
Yeah. So you may know that this act was was the original act was called foreign exchange, was called exchange control, because because the country was in a situation where controlling of foreign exchange was required. But subsequently, in 2017, the act was changed, and to a general level, and sort of um, it the concept moved from control to management. And central bank is still the agent for the government to regulate foreign exchange, and all the foreign currency transactions are regulated here. And when it comes to payments, foreign exchange act becomes relevant at the point of credit cards, when you have to have foreign transactions, then remittances, or any foreign exchange related transactions, then the Foreign Exchange Act comes into play now, right? Mm. So then we have AML and CFT. Now let's discuss this a bit in detail. I'm not going to go deep again, but I want to ask you all, what is your experience in how has these, now you all are senior bankers as well, these acts came about 2005. How has that changed the ways that AML, CFT regulations have changed the way it's changed banking, if you can recall? So, yeah.
Before this uh, email and safety came into effect, uh, banking sector was very much used for all sorts of uh, anti social activity. It's like finance and also uh, we didn't mandatorily requested that client.
Do you have another computer or a phone or something on as well with the same uh, uh,
No,
presentation on?
oh, no? Not really with me.
Because I can hear an echo. That's why.
Yeah, yeah.
Okay.
I will check and talk later.
Okay, right. It's okay. Continue, Asila.
Uh, Actually, now for any deposit over 200,000, we make mandatory for the client to write the purpose, and if it is beyond 1 million, we want the source of funds, and all these came, and even the KYC rule all came under email. So there's a big change after this came.
Yeah, yeah. So first, let's quickly, do I have the definitions here for um right. So we'll just look at what anti-money laundering is. Um, so what is first money laundering? So we have the situation as Asila mentioned, people, there was a growing, it's not to say that banks were sort of rampantly used for illegal activities or, you know, all of that. But I think what happened was there was an increase um, in there was an increasing trend where they were seeing how crimes were getting covered up through the legal channels. That basically money laundering is when you take illicit money and then you clean it up by putting it into legal assets. And a lot of the illegal activities like drugs and you know, even things like kidnapping and all of that, they were getting covered up through the banking, the financial system. So to prevent that, we had AML regulations coming in, right? And at the same time, there was a rise in terrorism, and we even Sri Lanka, we saw, got had the terrorist issue, and even the LTT was uh, blacklisted as a terrorist organization. So with um, all the issues of very sophisticated terrorist organizations coming and operating internationally, because they were drawing funds from all over the world. So in that situation, payments and settlement systems were getting used for these illegal activities, for laundering illegally acquired money and for financing terrorist activities, which is financing an illegal activity, right? So this is why these laws come up at the same time. So 2005, 2006, and this is the time when the world, so after 2001, right? The closest thing is we have September 11th attacks, and then there is a sort of a increased interest in suppressing terrorism in the world, and also at the same time the increase in all these other illegal activities, and laundered money was also going back into terrorism as well. So in that instance, the world came to a point where this became very important, and suddenly the bankers who were sort of doing their day-to-day jobs had an increased responsibility. Sort of, they were the first line of uh, fighting financial crime, and tellers and the front office staff became these people who had to protect the system from all these illegal activities, right? Um, and so if the Section 5 of the Money Laundering Act, the Prevention of Money Laundering Act of 2006, says that it applies to a person who is resident in Sri Lanka and or an institution, and then there's the act that commits what is constituted as an offense under the PMLA committed in Sri Lanka, right? So this is a sort of a location-based, territorially bounded applicability, right? And then the offense of money laundering is that anyone who directly or indirectly engages in any transaction in relation to any property derived from unlawful activity or proceeds from unlawful activity and receives, possesses, conceives, etc. Into, out of, invests in Sri Lanka any property derived or realized from any unlawful activity or proceeds, right? From any unlawful activity. So basically, bringing in money, investing money, and using this money, this illegally acquired money, is the form of where the money laundering begins, right? And knowing or having reason to believe that such property is derived, realized directly or indirectly from any unlawful activity or from the proceeds of an unlawful activity shall be guilty of the offense of money laundering, right? So it becomes, and it's not easy now. If you are more interested in AML, CFT, you might already be haven't taken courses in it and all of that. Um, for for very in-depth in-depth knowledge of this, you can take there are courses on financial on anti-money laundering and counter-terrorist financing. I don't know, I think IBSN might be having, CBS also has it. Our colleagues at FIU does it. It's very interesting. I myself have taken one of those. It's a very interesting course because you find the very the the sophistication in which people, the lengths people go to launder money and bring illegally acquired money to the legal streams. um, and this is something I found fascinating, the extent criminals go to launder their money and bring their money to the mainstream. So the FIU at the central bank was established in 2006 um, under the Financial Transactions Reporting Act. And under that, the provisions of this act, right, the Financial Transactions Reporting Act, banks, non-banks, all payment service providers become subject to this law, right? And it really increases their responsibilities. And so you have cash transaction reports and then all electronic fund transfers, you have to report them, right? And then there is the Suspicious Transaction Reports Act. STRs, the Suspicious Transactions Reports, right? So under the FTRA, you can't open and maintain an account when the account holder cannot be identified. Now, this is where KYC comes in. With now we've been discussing how payments are done from the KYC perspective. Now, we haven't been talking about the KYC angle, right? Which is ensuring that it is the right person who is coming to deposit the money, provided the requisite amount, and the legality of the person, right? That aspect of it. Uh, are there any experiences that you would like to share, whether you have come across, fraudulent IDs or any KYC related experiences that you would like to share as bankers? Okay, so uh, by the identification of the account means that you have to have the name, the ID. You already know this. You're all bankers, and all of you know this. The ID, the address, to identify the person, right? And in payments and settlement systems, now where the bank accounts are concerned, there is very specific levels of KYC required, right? Now, in certain levels, to depending on the type of or the nature of the transaction, you yourself, even within the banking system, the KYC requirements change. And for account opening also, there are certain levels that we ongoingly we will decide for things like mobile money, then stored value cards. The KYC regulations will change. So if it's a closed loop sort of uh, topping up stored value card, then the KYC requirements are, or sometimes they're not there at all. You can just buy it off the shop and use it, right? If it's a, and these don't carry a very big amount, right? Of course, and then once the value goes up, then the KYC requirements start to hit in. KYC is a very important issue that has been affecting banks and payment systems a lot, because that if there's some issue with the person transferring money, the transaction could be disputed, and it could really cause issues. So banks also, FIU is fines when there's non-compliance. So for payments and digital payments, digital innovation, now we've been talking about increasingly, fintechs coming in, smaller players, and all of these sort of new systems coming in. Uh, we have seen that KYC is the biggest issue and in most of the time, because it requires a big infrastructure. You can't, it's not just collecting the information at the start. Um, you have to verify the identity, and that under the existing rules, most of the time that is physical. So this brings in a level of complexity, especially for those who want to join payment services through apps, who want to be completely digital, because there are still physical points in the process, mainly due to AML and CFT related regulations, right? And the central bank and all the banks, the Department of Registration of Persons, we've all been working together to solve this problem, to see where we can minimize the friction in the process created by the FTRA and AML CFT regulations, right? Um, so as a result, uh, there were some discussions, and with the Department of Registration of Persons, there was a discussion. The central bank discussed with them, and now KYC can be done non-face-to-face, right? So there is provision for non-face-to-face KYC, but there are some requirements that need to be met under the new regulation, and banks are still working on the technical connectivity with the DRP, so that they can pull NIC information directly from the DRP site. And for the though non face-to-face KYC is possible, still there must be provisions for some things like video conversations, where you can check that there's an actual person like this, right? Also, the central bank has a blockchain technology project for shared KYC. We are going through the proof of concept phase now. We are testing it at the moment. And if this comes through, there will be, if the test, if the POC goes well, and if the industry and the bunch board decide to go ahead with such a sort of a sharing KYC solution, that will really reduce the cost and the time, both for the customer as well as the banks, in engaging in KYC related matters, right? Then we have, so it's not just KYC at the point of onboarding, we have customer due diligence rules, right? So customer due diligence is sort of the ongoing checking of the customers, changes in the ID, etc., right? So when two conduct customer due diligence when at the point that you're entering into business relations with the person, and then providing money or currency change in business for transactions amounting to 200,000 or its equivalent in foreign currency, providing wire transfers exceeding 100,000, carrying out occasional transactions exceeding 200,000, uh, or there is a suspicion of money laundering or terrorist financing, or the financial institution has doubts about the veracity or adequacy of previously obtained customer identification, right? So the responsibility of the financial institution is actually quite vast here. It's especially with the last two. So the first 4 points are fairly straightforward. It's based on value, right? So if the value is over this, it's fine. You just, if not, it is a problem. Um, Now, when there is suspicion of money laundering or terrorist financing, that means there is the banker who faces the customer, or who acts who is handling that transaction, has to make a judgment call, right? Has to make a decision. So that then puts the onus on the banker. How within your, how do you train your staff who engage with the customers and engage in these type of in transactions that are related, that will bring these clauses in effect? How does that happen within your banks? Kavindra, would you like to share with us your experience?
Yeah, ma'am, there's when customer depositing money over 200,000, that there is a separate space allocated in the deposit slip that he or she has to mention that his identity, and also that if the customer regularly depositing the same amount with different branches or different places with using the cash depositing machines, then the head office follow that process, and they ask to check the transaction and the what sort of customer, and follow him and get the details, further information from the customer.
So there is some tracking involved, right? So the bank has to behave like detectives and do some tracking work as well. Do you all get trained? Sorry, Kavindra, are you which section of NSP are you working in?
I'm a branch manager.
Right. Okay. So you have to deal with this regularly, right? This is sort of one of the main things that you have to deal with, the FIU related, KYC related issues.
Yeah.
Do you train your staff in these so that they can identify these?
Yeah, in each and every year, the central bank has conducting the training session, and also the bank conducting the training session. That all the staff members should participate those training sessions.
Yes, that's very important. So, do you find that it is does your staff, is your staff able to identify suspicious transactions or suspicious customers when they come? How do you feel it's effective? The training?
Yeah. Basically, the front officers and basically the tailors and cashiers and the front officers, they are specially trained for these sort of things. And for an example, the customers, the regular customers, they know very well. If a customer is a new face, or new person which came to the branch, they take extra care about him and the customer. So
Yeah.
that's also, yeah.
So basically, they are also identifying patterns of behavior, no?
Yeah, yeah, madam.
Yeah. Because that's why I said, so in these regulations, as in many of the regulations, banks take the front line. You all are the first line of defense. It is after that the others come in. So once the bank will be the first one to see and notice if something wrong is happening or unlawful is happening. So the bank has a very large responsibility at this point, and I know banks have to spend a lot of money on training and having up-to-date systems that can pick up on these patterns of even depositing and all of that. So it is a big cost, but I think the reason is the need is very important. The purpose of all of this, they have been there to like stop money laundering and terrorist financing. So this is the need is very high, though I think the cost is also very high. We have Dayaparan and Isivara have also joined us, so welcome to both of you. Dayaparan, if you don't mind, I think you're in compliance as well, isn't it?
Yeah, I was there. Right now, I'm at branch operations. I would transfer
Okay.
from last year. Yeah.
So we were just discussing FIU related regulations.
Yeah.
And right. So I was asking, just to update the two of you, I was asking the other two who are here, Kavindra and Asela, about what practices banks adopt to ensure that they meet these requirements, such as training and all their systems. Is there anything that you all would like to add as well? In terms of your experience, how the introduction of anti-money laundering, terrorist financing laws have changed banking as you know it, and the importance that is given there.
Rashankar,
Yeah.
I
Guys.
I think, madam, best to share the that Bangladesh case.
Yeah. Okay.
Yes.
Okay. That everyone knows that. I think.
Yeah.
The story is like this. No. Our bank, we didn't have a system those days. All we did manual, because AML, when it comes to AML, CFT, where we want to have a system, because we have to track the transactions as per the KYC regulations, and we had to raise STRs on that. For special instance that we received money from for a NGO. That NGO name was a different. Normally foundation was the name. Then what the name came for us is foundation. From that only we identified. Then we just checked with the branch as well as the customer. Then they said, no, this money is our money. We need to receive. Then we asked the sender beneficiary relationship, but they didn't clear it. Then we asked why the fund is coming in. It's around 80 million. Then we asked why the money is coming in, and they didn't have any clear idea on that. Then manager also, she's also not aware of the customers. The address was given. That address is wrong. The 5 years before, that address was not there. That means a branch manager should be a vigilant, and they have to act like a police officers. Whenever customer comes and giving a documents for a billing proof or something else, if you have a doubt, then you have to go and do a site visit to check these things, whether the NGO is acting, or NGO or a person or anything. We have to cross check. That's how the STR, all these things are working on. But most of the time, when customers are coming into the business, they bringing up 80 million to 60 million to 100 million. branch managers always welcoming the deposits, for the doing businesses. Okay. They always trust business. Then they say, whenever we ask for a customer inquiry, anything just from compliance, the branch manager always says, well-known customer in the area. And he's doing massive business. When you go and see, the small shop will be there. Those things are there because branch managers and the frontline staff, they should aware on these things. That's how it works. Anyway, but now the advanced things are coming in. Beneficial ownerships are coming in. FIU is bringing up new things. New circulars are coming in. Because earlier days we didn't have a beneficial ownership tracking because there are several companies owned by one person. But when it comes to the director board, he will be not there. Like the things are going on like that. And political exposed people, we have to put them in high risk, and we have to monitor them separately. And government officials, all those things are coming in. But in practical, bank staffs are not police officers. We can't question like the customers why this deposit is coming in. All those things are there. I have a great example because there's a practical example. We earlier our bank, we didn't monitor debit card transactions, but when it comes to debit card, I will do it next presentation also. Customers, multiple customers came and opened accounts, savings accounts with the 1,000 rupees deposit, and they wanted to get a debit card also. Then we issued the debit card for the customer. Then following day, they will receive deposits from Colombo, around 60,000 to each and every account. Okay. Then next day, 58,000 will get withdrawn in Saudi Arabia or Qatar, anywhere else. Okay. This happened around 2016. Okay. Then linked that scene to the Easter attack. Okay. This happened, and FIU was alerted. And not only our bank, and HNB blocked around 400 accounts, and Sampath blocked around 243 accounts, and we blocked around 45 accounts. And all those accounts got into this trap because they deposit, and these mostly the housewives are opening accounts, and they are getting, if you transfer 300,000 to that purpose, and you will get 5,000 each. This was encouraged in most of the areas around Sri Lanka, not only in specific areas around Sri Lanka. This is how we have to innovate new kind of reports, because earlier we always monitor credit card or transaction, normal savings account, all those things, current accounts and all those things. But from unexpectedly, debit cards also involving this business. These are new things are coming in. New innovations are coming from the fraudsters. That's how new compliance is upgrading each and every. But sadly, says banks are not allocating funds, and as per Basel rules, banks should allocate more resources to compliance, more funds to compliance, but not happening. Practically in Sri Lanka, it's not happening. Only 5 staffs or 10 staffs are there, and they are not allocated. They are not well paid or something else. All those things are going on. That's how it works. The new update.
Yes. So thank you, Daparan, for that. I think we will hear more from you in your presentation next week. Before I forget, Asela, if you don't mind, could you share your presentation with us that you presented last time?
Yes, madam, I'll do that.
Okay, right. Thank you. And for the others, Dayapan will be presenting next week a short presentation on his experience that is related to this course as from his perspective. So, and anyone is also, you're all welcome to share your experiences, because as I've said before, this is a course for senior bankers, and with senior bankers, you all already know very well a lot of the substantial side of banking and payments and a lot of the laws. So what really we should bring is the discussion as to, with all that experience and the current laws and the way things are going forward, that is, this course is about digital payments and fintech innovations, right? So we are talking about things that are going to happen in the future, and the systems that are coming in place to enable that. So we must see with our existing knowledge, what can we do to go forward, right? So this is not just merely me telling you what is going on, but really a knowledge sharing experience. And I have to say, as a central bank, through your discussions, I also gain a lot of knowledge and insight. Sometimes it is things we already know, but from a different perspective, and that is very, very helpful, so that we understand what you all also face in as bankers on a day-to-day basis. So that's also very important. Thank you for that, Madhaparan. Now, now this is exactly now what the examples you gave was exactly for the last 2 points of this slide, and Kavindra, who is attached to NSB Gol, has had the same account of the responsibilities of the bankers to be the sort of the policemen or the detectives, and capture this. But the reality, the reality which Darpan also mentioned, is the cost. KYC is very, very costly, and this becomes an issue even, even let's say if some foreign payment system wants to come to Sri Lanka, they have to comply to these. And then when the cost, so this becomes another cost center. And then they really decide, okay, do we really need to come to Sri Lanka? Those questions arise. Do we really have the resources to comply in another country? We already have to comply in all these other countries, because the law it's an international regulation. So everywhere it's almost the same. And the cost is very high. So this KYC regulations is something that really becomes a game changer. So having automated systems, having a well-trained staff, having figured out some efficient system can make a huge difference in the success of the bank's business. Or even if you're only a payment service provider, even for that, there is a huge, even small innovations to save some cost points will take you a long way, because this is integral to every single transaction. So it's very, very important. And a lot of the new sort of fintechs who come, they find it very difficult, this compliance requirements, meeting the compliance requirements. You anyway have technical compliance, like we discussed last time, the minimum compliance guideline for mobile apps. And so you have the prudential requirements to make sure that there's system stability, and then you have the FI requirements to make sure that these are not criminal. I mean, ideally, as Diamond mentioned, there is a lot of money that comes in. So from the banking business side, it is very tempting. But from the legal side, you have to make sure that you don't get tempted and bring in criminals into your bank, because just the way the money comes in, the money could go out. That's the other point. And there are constant, he mentioned the debit card, credit cards. We have these issues in many, many points. And it's amazing how sophisticated criminals are. And it's also very saddening, because you think, if those people use their very sharp minds for legal and productive activities, how great it would be for the world. But unfortunately, it is not the case. Yeah, so that is that. And then we have, we covered all these. So then we have the STRs, when to raise STRs. In this one, I haven't included the statistics, but if you take the course on FIU, courses that FIU do, they share the statistics with you. And these STRs are raised for payment card frauds and sort of payment system related matters as well. Right. Then another important thing is the tipping off. right? So when there is an STR, the report has to be made to FIU, right? And then, but the person who's under investigation should not know. Can you all share with me what steps you all take to make sure that the person who you have raised an STR against is not aware that that is happening? Because sometimes you might be holding a transaction and then the customer is asking where is the money, so this creates an awkward situation, doesn't it?
Yeah, we simply by the time saying that it's with comply
With
and
compliance.
yeah.
Yeah, because I have also heard that people saying the bank is saying it's with compliance. We just say okay, because we also know what that means. But that, and this is the awkward situation, but that is the way it is to be done. And so
Sometimes
when
we say there's some reference from central bank as well.
yeah, so that this is the point, when because then they call the central bank. And that's how we know that the bank has given that answer. So but that's why I asked, it is an awkward situation, but it has to be dealt with. And I think that I don't think there's any sort of best practice or anything that can be done other than that. So this is regarding yes, we have one more. So the duty to disclose under the Prevention of Money Laundering Act. Any person who knows or has reason to believe from information or other matter obtained by him in the course of any trade, profession, business, or employment carried on by such person, that any property has been derived or realized from any unlawful activity, shall disclose his knowledge or belief as soon as practicable to the FIU. Any person who fails to comply with this provision shall be guilty of an offense. So we all have a responsibility to report suspicious transactions. And actually, there are people who do that, which is a good thing. Do you have normal customers coming and reporting suspicious transactions of others to you? Have you all had that experience? Where normal customers may come and report to you, I think there's something suspicious going on, or give you sort of tipping off.
Actually, one or two customers may do, because some SMSs are coming to remit some money. For that only they alert us these are happening. But mainly the STRs are done by the branches itself, branch staff or a branch manager. They are the people who are filing STRs with the transactions to the account.
Yeah, that's good. So for those of you, I think all of you already know this. So this is the FIU has a dedicated site, and all the information are there, right? Right. We have then the Electronic Transaction Act. So that is sort of, so FIU, this act is, I mean, this is related to crime. We also have other crime related acts, such as the Cyber Crimes Act. Then there's provisions of the Evidence Ordinance. So these are, I haven't gone into those because they're sort of largely related to all cyber crimes, let's say, and they become relevant to payments and settlements the moment we have an e-commerce transaction or some online transaction. So they become relevant, but I haven't included that here because that is not the sort of the journey that I want our discussions to take. But there are many, so this is not the only sort of directly criminal activity related regulation that we have here, right? Then we have the Electronic Transactions Act. Now, the Electronic Transactions Act is a very important act that enabled proper digitalization, right? So proper digital transactions. So though we say electronic, sorry, it's not electronic. Let me just change that. So Electronic Transactions Act really enabled the proper digitalization process, not only in banking, but within the country. And we are seeing increasingly the use of digital signatures, especially with COVID, with the closures, we had the situation of electronic signatures. In the banks, have you started using electronic signatures? How does that work for you?
That is not enabled, madam.
Which bank is this?
From NTB.
Right. Okay. Other banks?
Yeah, still not enabled. We are not getting electronic signatures.
Yeah, because this is something that we noticed, that the banks, because during the COVID time there were many documents that had to be signed, and the banks always sent physically signed documents, even though they were told, okay, if you can use electronic records, signatures you can, but these were for very specific. This was a very specific documentation process that we were going through that had many parties signing. Yeah, so this is why I asked this question. So this Electronic Transactions Act enabled the acceptance of digital messages, electronic documents, emails. All of that became permissible, because the real problem was when you go to court. Those days, when you go to court, there was no law to say that an email or a text message or something could be accepted. It has to be sort of written, handwritten, where it could be proven that this was written by this person, because that is really the problem here. Who wrote it, right? So there wasn't provision to admit electronic documents as evidence, and this was increasingly becoming an issue, and this is why a specific act was brought in to enable the acceptance of electronic forms of documentation. So this becomes very, very important. And then within the Electronic Transactions Act, there are certification authorities who provide for the electronic signatures, who certify. And then even within RTGS and our payment systems, the records, the scriptless records are accepted. That is, we have the treasury bills, they're all scriptless now, they're all electronic documents. So there are certification authorities that say, okay, this is correct. So in that that whole ecosystem of electronification of documents came through the Electronic Transactions Act, right? Then, so the broad principles here, there is the recognition of data messages, electronic documents, records, communications. They can't be denied legal effect. This is the real issue here, the legal effect, where when you take it to a court of law, where it has to be accepted, right? And so these, obviously, this forms a very wide ambit of what is an electronic document, right? And so Sri Lanka's Electronic Transactions Act is actually in line with the international standards. And we have signed this treaty, and we were, I think, the first country in South Asia to adopt these international standards into our law. And this makes, so there is a level of harmonization. So the standards that we use similar to those used internationally. So our electronic documents, our certified documents have that value internationally. And this act is what, as I said, enables documentary and record purposes in electronic payment systems. However, don't get this mixed up. Electronic Transactions Act it doesn't have anything to do with financial transactions per se. It is talking about any transaction that everyone does electronically. So even sending an email is like a transaction, right? So this is the link to the act if you would like to go through it. Before we go to the next phase, which is the data protection law, let's take a break and let's say come back in about 20 minutes. Is that okay? Can you see the screen?
Yes, yes.
Okay, right. So we are going into new areas of law. So these laws don't exist at the moment. And we are talking about things that are going to come. Okay, so let's start with data protection. What do you know anything about data protection laws? Are you using any data protection laws? Okay.
Under
So,
the
sorry, yes.
duty of secrecy, we are supposed to keep the customer data protected.
Right. Yes, exactly. So all bankers, financial institutions, they all under the Banking Act, this duty of secrecy comes. We central bankers also have the similar duty, and so we can only share data with the customer consent, right? Otherwise, everything is we have to keep it secret, and that's how it is in the mandate itself. So when our business relationship, when we form the initial business relationship with the customer, that is already inbuilt, that we will keep their information confidential. So the banking industry has an idea of protecting customer data, right? And this, especially financial data, is very important because for obvious reasons. I mean, it is people's wealth, and they could get subjected to let's say extortion and all these issues if their data is freely available, right? So the industry has that sense of data protection. Now, what we are seeing is with digital innovations and a lot of non-banks coming into the industry is that they are not bound by these laws of secrecy, right? And data is the new gold, right? Because it's very, very valuable. We all know this, right? I think now everyone has a good idea about how companies collect customer data and commercialize that customer data. So some of the famous examples, would someone like to tell me some of the famous companies that collect customer data and commercialize it? There are so many.
Facebook.
Yeah. Sorry?
The Nielsen.
Facebook.
Yeah, so Facebook is the very obvious example for all of us because that's where everyone places all their personal data, right? We are very, for some reason, everyone is so forthcoming with a lot of their personal information that they otherwise would not share with people, interestingly, on Facebook. And not only what we share on Facebook, every single click, we all know this. When we search for something, then immediately we see then we go to another website, what we searched for. Let's say we searched for vegetables on one website and we go to the next website, we will suddenly see ads for vegetables appearing on the screen. And we now we are getting used to this, right? But I remember there was a point when everyone was really, it was quite sometimes alarming to see that how this interconnectivity, and now with digitalization, all these points are connected, all these data collection points. Every click can be connected via APIs, and this data can easily flow across websites, vendors, institutions, companies, governments. So it's not like, if we joke about this, if we publish something in the newspapers these days, very few people will see it. In those days, they would be like, oh, go and publish things in the newspapers. But now if you go and publish things in the physical newspapers, very few people might actually see it. But if you go and post it on Facebook or Twitter or anything, if it's something interesting, people will immediately take a screenshot and then share it on WhatsApp, and then everyone will know. So it's immediately on so many channels, and then that screenshot will appear on other websites like Instagram and all of that, and probably some news sites might pick it up, and then it'll go on the news. Also, we are existing in a digital world, and media is a very easy example for us to give, because it is what we see. But it's not only media. All the commercial businesses, when they go online, there is data generated. We are always generating data, and this is data about us. We fill in a form, we go and select things. That is also our personal data. We are showing what we like, and that is how they market things to us, right? Because we are clicking and then we are moving them into a basket, right? They don't know whether we bought it, because the payment leg is secure and they can't access it, but they know to the point that we took it to the basket, they know that we have done it. So they know that we have some preference for it. News, or anything, articles. Every time we click, we are creating a digital footprint of ourselves, right? And we are creating a digital identity that goes beyond our physical identity. Right now, there is me, there's Kanchana Bhagavita, you know what I look like. In my ID, I'm supposed to look the same. So when you're doing your KYC, okay, that all that information is there. But who is Kanchana can be created through my likes, my choices, what I buy, where I live, all those things. So very easily, this package of the person, a broad identity, can be created with all this information, right? And people realized that companies were taking their data and making money out of it, right? We are just innocently going to read a newspaper online or something like that, or just see what our friends are doing, or post something. But people realize that there are companies who are making a lot of money from other people's data, and sometimes using it unethically as well, right? So then the customer is the one with this commodity, right? The person, the individual is the one with it's the information that I generate about myself is mine. So this concept was really taken up in Europe, right? That's where it really got picked up. And so then in Europe, they even in early 2000s, the concept of data protection, right, the concept of personal data started coming up, right? That discussion started coming up, and then finally Europe passed something called the GDPR, which is a General Direct Data Protection, GDPR data protection regulations, right? And then based on this, now this really took the world by not surprise. It really changed the way that people started looking at customer data and personal data, because it started recognizing the value of a person's data, which is not only sort of statistics about themselves, but data that which they generate through by just living, right? So the European, because it was Europe, and then they brought it to affect all the companies, right? And it has affected even companies, whoever deals with Europe, it affects them, right? So the banks, now I know that some banks, when you have for your foreign transactions, when you have European counterparties, you get subjected to GDPR based rules. Is that the case? I don't know whether you are engaged in that level of operations. Where you can't disclose certain information and you have to agree to the data protection regulations of Europe. Okay, so it's there, and even your banks, when you have European counterparties and all of that, you get subject to this law. Now in Sri Lanka, sorry, so the really important thing about this about the data protection law was it enabled this new line of innovation where there is data sharing between companies, right? Those days, information systems were closed. So when a company gets the data, it is in that company. But now this data is valuable and we are in sort of data-driven businesses, selling this data is, as I said, valuable. So then there must be some regulation framework to protect this commercialization process, this sharing process, something to protect people and also protect the companies as well, you know, because sometimes they might innocently be using it and then suddenly a customer might be like, hey, you're violating my rights. You don't have the right to use it. So these laws really set out the principles to protect the rights of the data subject and also enable electronic commerce, right? Electronic business for the growth of this phase of digitalization in the world, right? In Sri Lanka, we don't have data protection laws except for the one we have in the Banking Act, and then the Department of Registration of Persons they have a data protection clause for the citizens' data. So there are sort of sectoral data protection laws, but there isn't a general data protection law. Now, the central bank initiated this in 2018, the Payments and Settlements Department, because we were faced with the situation of non-banks wanting to provide payment services. These are the fintechs, right? Now they don't have these secrecy provisions, and right now sectorally we can regulate them because they go through banks. We can sectorally regulate them, but we envisage that this problem is going to become much larger, right? It's going to affect everyone in the country, because when we have apps, you know, data is getting shared, and after a point you lose control, right? Now we have the banks, we have a line of control, then banks have a control over the non-banks that they are directly connected with, but the subsequent points we lose control, and then we don't know what happens to the customer's data. So because of that, we initiated this, and then the ICTA, that is the Information Communication Technology Agency of Sri Lanka, and the Digital Ministry, everyone got together and we started drafting the data protection law. And now it has gone through many phases, and it is now in the draft stage, and it's about to be presented to Parliament very soon. It should be presented to Parliament. There were many rounds of public consultations. It was a very transparent process. I was also involved in the drafting of this law. And we wanted to make it as transparent as possible because it was affecting everyone to a level that they previously was not. It is not a level that other laws affect them, because this cuts across so many industries, practices, activities, because everything is information, right? So there is data generated everywhere. And we're talking about individual rights of the citizens, right, and the people who this is applicable. So it's a very broad act. And the main reason for us in payments and settlements, this was to enable fintech innovations in a safe environment so that the customer data is protected. And the fintechs also have a clear framework within which they know how they can act, right? Right. So the Act provides for the regulation. Has anyone read this draft law, which has we've given it a lot of publicity? I don't know if you are already aware. Any of you are already aware of this? Okay. So I'll just presume this is new to everyone. So this Act provides for the regulation of processing of personal data, right? And to identify and strengthen the rights, there's a spelling mistake. Let me correct that. Coming. The rights of data subjects. This is the good thing about presenting from your own computer. You can correct things when you notice it. The rights of data subjects in relation to the protection of personal data, and provide for the designation of a data protection authority, right? So now when we take personal data, now under this draft act, personal data means information that can identify a data subject. Now, data subject is the identifiable natural person, alive or deceased, and to whom the personal data relates to, right? So remember, it's not just you, people who are alive, it is also deceased, because remember, this is information about yourself, like a person. Just what I always tell people when I'm explaining this is, don't call these people data subjects, don't call them customers, call them yourself, right? When you call them yourself, it is much easier to understand the act, because most of the time we forget that we are also people, and that we are also subject to these laws, and sometimes these laws are there to protect us, and this is one of those laws that are really there to protect the person, the individual, right? Not to just enable commerce. And it's most of the laws, the laws that we've learned so far, it is to enable commerce, it is to facilitate systems. Of course, it is there to protect the public, and that's what the payments and settlement system does. And the Monetary Law Act says to maintain financial system stability, price stability, that is for the benefit of the people. But this act is directly related and talking about the individual, right? And many of the time, the other acts puts rights and responsibilities on any person, or at the person level. So any person engaging or about to engage in a payment system, or about to engage in something. But here we are talking about the person itself, right? So personal data means any information that can identify a data subject, that is the person, directly or indirectly, by reference to an identifier such as a name, identity number, location data, online identifier, so your IP address, B, one or more factors specific to the physical, physiological, genetic, psychological, economic, cultural, or social identity of that individual or natural person. Now, this we drafted based on the European standard, right, on the European GDPR, because we felt that that was the most sort of holistic and advanced law around, and most countries are a version of that, or countries that came before the GDPR are trying to bring it in line with that, because that has a lot of that protects a lot of the rights. It is a bit complex, but from the rights perspective, it's very strong. So then you have what is the identifiable natural person is one who can be identified directly or indirectly. So, our phone numbers, anything that can say this is this particular person. If some specific information can, some number or identifying number, anything, if you can say, okay, this is Kanchana, then that is that is a personal information, right? Personal data, right? Then there are exclusions. Now, in all laws, you have the main law, and then you have the exclusions, the exceptions. Now, here, information about legal persons are obviously not personal data, and then anonymized data. So, if you can't identify the natural person, then that is no longer personal data. It can be freely used, right? So, in the Data Protection Act, now y'all are bankers, right? So now I'm teaching y'all this from the point of view as bankers, not only as persons. Now, when this act comes into play, everyone will get affected, all of us, right? There's no group, no entity, no firm that is exempt from. You might be exempt from certain clauses, but not from the act itself. So it's a general act, right? Now, if you take RTI, it is only applicable to public institutions, right? So this is not like that. This is applicable to all. So let's take, so in the Data Protection Act, there are roles, there are identified roles, right? Now, the controller, now you have the personal, the data subject, then you have other people. Now, who are they regulating? They are regulating the people who will process personal data, right? They are not regulating the owner of the data. They are regulating the companies or the firms that will process this personal data. So you have two groups. You have the controller and the processor, right? Now, the controller is a natural or legal person who decides the means and the processes of the purposes of processing the data. Now, the control is the person who has the subject's data, right? Now, let's say a bank. Now, the bank is a controller. Directly, the customer is giving you the data, right? Then the processor is someone who processes on behalf of a controller. Now, an outsourced call center operator, and if you are going to outsource your information, now banks, sometimes your salary information is outsourced, right? Now, that outsourced group, they are a processor. They don't directly own the data, but they are doing it on behalf of the bank, right? So there are two groups, and the obligations are pretty similar when it comes to processing. So you can't say, oh, no, this data was not given to me, therefore it was given to bank A, therefore it is not my data, it is not my responsibility, so I can process it the way I want. Nor can the controller say, oh, no, I have outsourced it and I have nothing to do with it now, it's someone else is processing this data. That also doesn't work, right? So if you're processing any data, then you get caught to the act, right? So there are some concepts in this law that I just want to highlight. Now, processing, right? Processing is a very, very wide definition. So you have any operation performed on personal data, that is collection, storage, preservation, alteration, retrieval, disclosure, transmission, erasure, and consultation, alignment, combination, or the carrying out of logical or arithmetic operations. So anything that you do with the data, even just holding the data, is called processing. So you can't just, if you hold the data, if you hold any person's, any third party's private personal data, then you automatically become subject to this act, right? Then in this, however, there are provisions to exempt and with different treatment, right? And sometimes more treatment. Now, for instance, the pseudonymization of data. Processing of personal data in a manner that personal data cannot be used to identify a data subject without the use of additional information or additional and such additional information is kept separately. So if you do it in a there are ways that you can still process the data and without getting caught to the very sort of stringent rules. There are ways that you can do, like pseudonymization, anonymization. There are things that you can do, right? But at a personal level, that if you are going to process it, then you need customer consent. So that's why I said the banks are already at an advantage because they know this practice. You need customer consent very expressly. You need to get customer consent for processing of the data, right? Now there are also special categories of data, which is, so you have the normal categories of data, personal data, and then there are special categories. These have been identified as racial and ethnic origin, political opinions, religious beliefs. Financial data is also included in special categories: genetic, biometric data, health data, sexual orientation, data relating to criminal offenses and convictions, data of children. So they have special treatments in the law, right? But now I'll just go to like what this is based, the principles that this is based on, right? So we have, you can't, processing of data, right, have to meet these principles, and these are the GDPR principles, and they are, if you look at the act, our act also, the draft act, the first sections address these 7 principles and how they are captured in the law and what the obligations, the related obligations based on these principles, right? So there are 7 principles. I will just go in for explanation. So first principle is the data collected must be lawful. There must be lawfulness, fairness, and transparency, right? So explanation is, you have to identify valid grounds for collecting and using personal data. So now, for instance, I'll give you a good example. I went to Burger King. There's a Burger King near Fort. And so that was the first time I had ever gone to the shop. So I went and bought obviously it's a Burger King, so it's a burger. So then this girl is asking me for my NIC. And I said, why are you asking for my NIC? And they said, no, the system is, is it the NIC? Yes, it is the NIC. And then she said, no, the system is asking for this. I said, why? She said, I don't know, I can't help it. I can't go forward without collecting this. And I said, it's not necessary. I said, I'm not giving. Now we are at a problem. Now the burger has now already been made for me. Now it's being made. Now they've already started the preparation. So now it's a big problem. Now what do we do? So I said, just put whatever number you want, because you don't need that information. You have no lawful authority to collect this information. So, and Burger King does not need that information from me. All you need is my money for the food. That is all they need. And then they asked for my phone number. I said, why do you want my phone number? Again, she doesn't know because she's just at the cashier. So then I said, I don't want your promotion SMSs, so please don't take my phone number. And then she said, okay, I can't proceed with this transaction until I put some. I said, put any number you like. So I think she probably put some zeros or something. And then finally, we managed to get the food. I managed to buy the food finally. And trying my best to have an anonymous, to some level, an anonymous transaction. Now, we find this in many places in Sri Lanka where it's not real. So because there is no existing law making this illegal, they are easily collecting all this information. But our personal information as bankers, we know this is very important. Our ID information is very important. We shouldn't be going and giving it to everyone. Our names are very important. Now our phone numbers are also very important because our security, our OTPs are coming to our phones, right? So we should be very careful as to who we are giving this information and where. Now if we take hospitals, they are just collecting everything, and it's very difficult to go forward in process because processing the transactions without these numbers, right? And most people will uh, collect, will just give the real numbers, right? And there is no need, because there is no legal obligation for them to give it, right? And they have no legal right to ask for it either, because no one has asked them to collect personal data. Now they have decided for their conveniences, and the software developers, because they also have no idea, they don't have the idea of what is personal information and respecting personal information. They will also say, oh yes, we can collect, we can put this into our software app design, so let's put it, let's ID, birth date, mother's name, everything is they're putting it in for no reason whatsoever, right? So we're working in this very sort of dangerous environment where there are a lot of people who have the skills but don't have the ethical ideas or the knowledge of what is correct and what should be done and what should be done. So in that space, it is imperative that we bring laws like this in as soon as possible. Right, so a lot of the time there is no legal requirement for a lot of the people to collect the data, the personal data that they are collecting, right? And do not process the data in a way that is unduly detrimental or unexpected or misleading to the individuals concerned. Now, let's say you take the data and you use some personal data, let's say some let's say just simple one, complexion. Let's say someone's complexion has now been stated somewhere, and now they are discriminating people by their complexions, right? Now that is unfair, right? That is against the fundamental rights of that person. So then that way you can't, the data should be processed fairly, right? Now there's a very interesting thing about these Google, they have these auto-driven cars, driverless cars. Now they have their systems where they can identify people, right? Because these are just computer programs, right? So they're just binary bits and bytes that are saying, okay, this is a person, this is not a person. And you have to train the machine. The machine learning models have to be in training the system to identify correct people. And then it was they noted that because it was training, now when they are in Western countries or in, let's say, East Asian countries, they are training on very fair people, and then the machine wasn't able to properly capture darker people. So it was, that is because the machine was getting trained on the fair people, right? And you might have seen on Facebook, there were all these competitions saying, oh, post 5 pictures of yourself, and then there were a lot of warnings going around saying, okay, these are going to be used for facial recognition, and which might very well be true, because facial recognition software need to get as vast a data pool as possible. Now let's say we put a machine learning model. Now everything is getting digitized, right? Let's say we are putting a machine learning model for recruitment, right? And the machine learning model is now learning from the past data. Now the past data has been selecting only one type of people. Let's say they're only selecting men, because the past data is mainly men, because historically more men have been, let's say, joining the banking industry more than women. So naturally there are more data points for with men as the criteria, right? Now that doesn't mean that the bank is discriminating against men or women. It just happens that more men have come for interviews, so more men have gotten selected. Now, but the machine will see that as a positive. The machine might see it as a positive, where then the machine might start discriminating against the men, discriminating against women, because they think that, you know, you should select more men because it's just a machine, right? So these are the unexpected points where fairness, lawfulness, transparency, those things. Now, the example I gave for machine learning is something that you might not have thought, right? We think of discrimination as people, but sometimes machines also could unexpectedly discriminate. So when we are going into a digitalization process, right, where laws are getting written into the systems, then we have to be very careful that all these aspects are addressed, right? And then when we are processing, we have to be clear, open, and honest about how the data is getting processed, right? You can't say one thing and then go and do something else. If you're going to say, this is what I'm going to do, then that is all that you have to do, right? Then the next principle is connected to that. That is purpose limitation, right? Now, when you're collecting data, you have to remember now banks and all of that. Now, still, they will collect all the data in the world, and then they will have another box to say any other thing that the bank wants. Right now, you can't put these any other things. It has to be specific, right? From the point of starting collecting data, you must understand, why am I collecting data? Now, when banks are concerned, most of the data that you collect are already based on regulations, right? So it's covered under this law. So that is, the purpose is clear. Now, KYC data, it's under the regulations, so it's fine. But when it comes to companies, they will say, oh, we are going to send, can we collect your data to send emails and any other things? And then our 101, not 101, our countless third parties who we connect with. So you can't have like this open-ended users for unknown purposes that even you have not thought of, right? You have to know why you're collecting that data, right? Only use the personal data for a new purpose if either this is compatible with the original purpose, consent is obtained, or there is clear obligation set out in law. So you can't just, the new purpose must be compatible with the original purpose that the consent has been given to, or there is an obligation by law, right? Otherwise, you have to go back and get new consent. And then data minimization. Ensure the personal data is processed is sufficient for to properly fulfill the stated purpose, has a rational link to the purpose, and is limited to what is necessary for that purpose, right? So again, what is happening is that minimization. You can't just collect data, because remember, the more data you collect, the more responsibility you have, right? And also for the data subject, the more risk that they have. Again, the Burger King example, like they don't need my NIC or anything like that. They just need to punch in the receipt and take the money, right? That, and give me and give me the print of the receipt. So that is, their purpose is limited to that, right? They don't need any other information from me. Then accuracy. Take all reasonable steps to ensure that personal data being held is not incorrect or misleading as to any matter of fact. Personal data may need to be kept up to date depending on what it's used for. So now I think a good example is CDD for us. So we have to keep the CDD, we keep it up to date for FIU regulatory purposes, but even under the data protection, you should make sure that the data you have is up to date, right? And then storage limitation. Do not keep personal data for longer than is needed, right? Now, especially with this having cloud services and cheaper forms of storage, people will tend to keep their data for much longer, right? Also, but for cost purposes, some people destroy the data. So the policies are different, but you can't keep it for longer than you need it, right? Personal data kept for longer can only be done so for public interest, for archiving, scientific purposes, historical research, for statistical purposes. Other than that, you can't just for the fun of it. For that, you might one day in like 50 years, you might want to contact a customer. You can't keep it like that. And then integrity and confidentiality. You have to have the proper security measures in place to protect the personal data being held, right? So that is a big responsibility. So you can't, now banks already again have this covered because under the central bank regulations, you have to make sure that that there is the information is held confidentially, but this increases that obligation to everyone, right? And then accountability. Have appropriate measures and records in place to be able to demonstrate compliance with the above principles. Any questions so far? Right. Okay, if there are no questions, I'll proceed. Now, the data... Sorry. If you have any questions, just feel free to jump in because there's a lot of information here. Sorry, I have to keep going to and fro because I can't see y'all when I'm presenting. Rights of the data subjects, right? Now, there are some interesting rights here. You have the right to withdraw consent, right? Now, the new modules that we are looking at this right to withdraw. Now, we never think of this right to withdraw consent, right? Like we close our bank accounts, but we are not withdrawing from the mandate, right? Now, you all can answer this. When we close our bank account, what happens to the relationship with the bank? What happens to the relationship that the customer has with the bank when we close our accounts?
We need to keep for 6 years.
You need to keep for 6 years. What happens to the mandate?
We need to preserve that as well.
Yes. No, but what happens to the powers given through the mandate?
That ceases.
That ceases, right? Yeah. So, in effect, by closing the account, we are withdrawing consent to process the information for longer than is legally required, right? That is what we are doing. So most of the time, when we start any business relationship or anything with a company, there is the implied consent, but there is no way to operationalize the taking away of that consent, right? So after does it say that you have to destroy the information after 6 years? No, right? You have to definitely keep it for 6 years, isn't it?
No, under civil procedure, if someone files a case, the bank has to produce.
That's
so
the
that prescription is 6 years.
Yeah. So after that, do you destroy the data? That's my question. What happens to the data after that? The mandates and all of that that have been signed. You don't know, right?
Don't know.
Yeah, exactly. So, I mean, the banks might be having mandates of customers for like 50, 60 years or anything like something like that. I mean, most banks do destroy it because it's very costly to keep all of that. But you do, you can, right? So here now with withdrawing of consent, then you can't process the data any longer. You can't, including storing the data, right? So that right becomes very explicit. Then they can access the data that they have. They can ask for the data, right? If someone has that data, they can ask, okay, what is the data that you have on me? And they have to produce. The data controller has to produce the data, right? And then they can ask for rectification. They can also ask for erasure. There are exclusion clauses, but these are the basic rights that, so unless you're in a special case, like, you have to keep it for 6 years, or for RTI purposes you have to keep it for, I think RTI is no 10 years, something like that. So when you keep, you can keep it for specific purposes like that, but the general law is that, okay, there is, you can ask for erasure, right? And there is the procedure to exercise the rights through the controller, right? So through the controller also they can exercise the right, and there's a right to appeal, and then there are rights regarding automated individual decision making, right? Which I talked about the machine learning, right? Sorry. So then you have the data protection authority, right? So this is a powerful authority that the proposed law is having, and it was, when we drafted this, the idea that we had was, because this is a new area, right? We have to enable the space for companies to adapt, and also people to adapt, right? So it has the sort of the more open clauses of where the authority can take action if someone is about to even engage in processing activity in contravention with the act. So to protect the data subject, the authority can take these steps in advance, because personal data is very valuable and we must really respect it, right? And I think the real problem that we are having in the country is people don't respect even their own information. And when they don't do that, those days it didn't matter, because it just meant your family and friends knowing about it. But now your information can be monetized, it can be misused, it can be used for extortion. So you have to be very, very careful as to what's happening with your data. Then where then the authority has the power to issue directives and for non-compliance to take action as well, right? So this authority is fairly powerful, but we are still figuring out the details of how this authority is going to be set up. But this is the draft law that is there, and I think I have the link somewhere. Did I put the link somewhere? If you go to there we are, the link is here. If you want to read it in detail, it's there in the ICTA website. Right. And the next one. So any questions so far? Do you think that this will largely affect the banks? What do you think? So it will affect the banks, no, in more of the reporting, they will have to bring it in line with the like the security requirements, accountability requirements. There might be some added obligations, but more or less I think banks will have less work to do, because those processes are already in place, and a lot of what you are doing is already in line with. So even if Sri Lanka didn't have a data protection law, and even though the world didn't have a data protection law at the time that Banking Act and everything was written and these systems came about, our banks more or less follow most of these principles anyway. So I think it shouldn't have a big issue there, but there will be changes that need to be brought in. So if you're it's better for you to read this up and get ready to see what is coming in the future. So now we're going to virtual currencies. Do you all know what virtual currencies are? Cryptocurrency is also another name. So, have you heard of cryptocurrencies? Bitcoin? No? Okay. So, virtual currencies. Now, virtual currencies, there are many terms that can be used. Virtual currencies, cryptocurrencies, some people call it digital currencies. The reason that the Central Bank of Sri Lanka and many other countries use the word virtual currencies is because this exists completely virtually. Like there is no underlying assets like central bank money. There is no physical paper note. There is no sort of physical connection with this currency, right? It's completely virtual. It just exists in a virtual space. It doesn't have any intrinsic value of its own. The value gets generated through the buyers and sellers. So we did touch on this in our first lecture. So now we're just going to look at it from a legal aspect and what has been happening to it, and we will see that with so as but this is what I always say, have been saying in this lecture, which is that the market or the action comes first and then the regulation follows based on what is happening with it, right? So you just don't, as soon as something new comes, it doesn't become illegal, right? You have to make it illegal. So virtual currencies are commonly used to refer, the term is used to refer to digitally created representations of value that are issued by private developers and denominated in their own unit of account, right? Common examples are Bitcoin, Litecoin, Ethereum. They're all names of different virtual currencies. Now, virtual currencies are not central bank issued currency, and this really has to be kept in mind because central banks also are considering central bank digital currency. Then that is a digitalized version of the currency that we have, right? Now, central bank issued recently in one of our regulations, we provided a official definition, which is that virtual currency is a digital representation of value that can be digitally traded and functions as a medium of exchange and or as a unit of account and or as a store of value, but does not have legal tender status in any jurisdiction and is not issued or guaranteed by any jurisdiction, right? So this is what the point of the private developers come in, right? So this is not anything that has been issued by a country like an official government. It is privately issued, right? And it can adopt the certain characteristics of money, right? Being a medium of exchange, being a unit of account, being a store of value. It can do all of that, but it is not the legal tender of a country. And the European Central Bank defined this in 2012 as a type of unregulated digital money, which is issued and usually controlled by its developers and used and accepted among members of a specific virtual community. Now, this goes back to our very first discussion. When we discussed that currency doesn't necessarily always have to be central bank issued currency. Now, if a group of people accept something as currency, then that to that group is currency, right? So in the same way, for virtual currencies, if some people are using it to exchange goods and services amongst each other and it is accepted, they can use it, but it doesn't have the protection that the officially issued legal tender has in a country. right? Now, if we take Bitcoin, now Bitcoin, this all started with Bitcoin, right? And now, for those of you who don't know what Bitcoin, it is the first sort of main scale cryptocurrency. There have been cryptocurrencies before, but this is the real successful cryptocurrency that even introduced that word cryptocurrency to the world, right? Before that, it was sort of few developers had tried out this cryptographic digital currency. So it's not a new concept, but this Bitcoin got it right because it used blockchain technology, right? So it was launched in early 2009. So it's now over 10 years. By a creator whose name Satoshi Nakamoto. No one knows who that is. And having the blockchain made sure that it was that it could guarantee its uniqueness. So the uniqueness of the coin, just the way we have security features, the blockchain ensured that the uniqueness of the authenticity of the coin could be guaranteed through the blockchain. Now that is good. So the blockchain itself is, sorry, the Bitcoin itself is secure, but its value is not so, right? Now, the way its value gets generated is through demand and supply, very simply demand and supply, right? Now, if you look at its value over the last year, we can see how volatile it is, right? Now it's been going up, and if you go further down, it's in a continuous trend. But if you, let's say you bought here and then you sold here, then you're at a loss, right? So you need to make sure that you get it at the right spikes. Basically, it's like a gamble, and there is no intrinsic value. So if the value drops, it doesn't have any value. It doesn't have even the value of the paper that the money is printed on. It doesn't have that value even. It is just a digital token, right? And with all the reasons that people have had to move away. Some people moved away from the financial sector. They lost faith in central banks with the financial crisis in Western countries. And, so they thought, okay, we'll find other ways to, try to create this to become a currency. But instead what happened was it hasn't really, there are people who use it as a currency, but it is mostly used as an investment instrument where people use it for trading, right? It's like a trading, like a security. So that really brings out the volatility and changes its value very, very easily. So you can see how volatile the values are. Even within a 24 hours, the value goes between about 3,000. It can change very, very easily, right? Then now different countries have been trying to grapple with this and address this in different ways. Now, a lot of central banks are tending towards banning, no one has accepted this as a legal tender, right? No one has accepted it as a legal tender. Some have allowed it to coexist and to let it be, right? And not taken any action. Now, this is a survey, a global survey that had been done. And in this, we can see that some countries, there's an implicit ban. And in the countries in brown, there is an absolute ban, right? Now, recently, it's not told here, but it's not shown here, but India also banned. So that is where it is going. So we're seeing that this is really, it has been a question for central bankers as to where do we keep it legal? Do we keep it illegal? Where do we protect customers' funds? And the discussion has really boiled down to customer funds, because this is used for a lot of scams, for a lot of fraud, for money laundering, for terrorist financing, because it is anonymous. When you use the blockchain technology, it can be the money is moved anonymously, right? So in countries that have not banned, right, and have tried to use this move of using it as an asset, have legalized cryptocurrency exchanges, right? Then there are countries like Japan, Estonia, Philippines. Now, Philippines, they make a lot of money from allowing exchanges in their country, because there's a lot of foreign exchange flowing into their countries by allowing exchanges, right? So even in the US, there are exchanges. And so this is actually a good source of like very easy income, because there is, if the Bitcoin is mined in your country, then the cost goes up because it requires a lot of computing power and electricity, right? So most of the Bitcoins are mined in cold places where you don't need to cool, where you don't need extra power to cool the processors. So in Iceland, in colder parts of China, in Russia, most of the Bitcoins get mined in these cold areas of the world, right? But so let's say you're not, but once it's mined, it's just the computer code. Then if your exchanges are in your country, then the money is flowing into your country. If the cryptocurrencies are doing well, then money is flowing into your country, right? Of course, there is trading involved, but the money has already come into your country, right? And now, why are countries banning this? What is the issue? What is it, sort of the economic? I spoke about the criminal aspect of it, but what are the other reasons that countries are looking to ban? Any ideas?
The fear of losing the value for that particular country's currency.
No, actually, no. It's that's generally not the. Even in countries where, I suppose in countries like where there's high inflation, there could be that fear. But Bitcoin, most of the cryptocurrencies that are highly traded are not used as currency so much. Actually, they are more valuable to be used as assets and for trading. So it's not very prudent to use them as currency, unless it's a sort of a lower value one where it doesn't matter. It's more useful to keep it and sell it when it's more when the price goes up. The reason that central banks and other regulators don't like these is because they're very volatile, right? So it's a very bad store of value. So the values are constantly changing and very susceptible. A few weeks ago, Elon Musk, do you all know who Elon Musk is? Do you know have you heard of the person Elon Musk? So Elon Musk is ELONE, NELON MUSK. So he started
PayPal.
off as a, yes, he was the founder of PayPal, and then he sold his interest in PayPal, and now he owns Tesla, right? So Tesla is always looking at, so they brought in the electrical car, and then they have a space program. So he's sort of known as this pioneer, this new age pioneer who's taking risks and sort of pushing the boundaries of humanity or technology or whatever it is. And so he has a big following. So he recently, I can't remember for what he made the transaction for, but he made a big transaction using bitcoins, and he wanted to push because the value of bitcoins are going down, and then that his endorsement really pushed the value of bitcoins up. So just a single person's action can change the value of a currency, right? So it is now you can't change the value of the dollar by a single person making a transaction, right? So if that is the case, it is very unstable. It's not a good store of value or a measure of accounting, because today you're accounting, let's say you're saying this book is 100 rupees, tomorrow it's no longer that amount, right? In actual terms. So we have to be so the value of a currency must be stable. So this doesn't have that stability. And the other is because people use it for investment and there is no underlying value, there is a very good chance that people lose money. Now we don't, there have been so many scams, there have been so many exchanges that have been hacked, and people have lost millions of dollars. Exchanges have lost millions of dollars because they can get hacked, right? If people don't store their digital wallets safely, their coins in their wallets, digital wallets safely, they can get hacked, and then people lose their money. And sometimes they have now sent their money abroad, right? So your country's citizens funds are at a risk. Now we are seeing that in Sri Lanka as well, because Sri Lanka is there are so many Bitcoin scams, and Sri Lankans love, there are so many people who love to make easy money, and they will go to put their money there, and then when they lose their money, it is a problem, right? So that is the main reason that countries are banning, because there's a very high risk, and it's a private thing, right? It's not government licensed or anything like that. So governments can't take responsibility for people's risky gambling behavior. So now, but as I said, now there are countries where they are making the most of this flow of funds, right? Because there's a lot of money flowing in and out. So there are countries that treat it as asset and have applied tax laws. So if you are owning bitcoins or any other cryptocurrencies, then you have to pay tax because it is an asset, right? Then there are countries that the AML CFT regulations are being applied to, right? Because this is also another serious problem. Because of the anonymity of the cryptocurrencies, it's used a lot for money laundering and terrorist financing. It's a very easy way, because a lot of good money is also coming in there. A lot of bad money can also easily come there, and this get cleaned up and resold as bitcoins, right? You can buy bitcoins and then sell it and get good money to your pocket. And then there are countries where both of these are, where both of them apply, right? Like Australia, Japan. So these are kind of like Canada. There are countries where both tax laws and anti-money laundering laws apply, right? So if you want to see more of this survey, I have put the link here. You can go. USA also, it's not here in this map. USA also considers it as an asset, and cryptocurrency exchanges in New York are taxed, right? So now the risks. Now, Japan has a lot of crypto exchanges. Actually, some of the world's largest cryptocurrency exchanges are in Japan. And in 2014, one of their crypto exchanges filed for bankruptcy after losing nearly $500 million, right, worth of bitcoins. It was hacked into, and the value was just wiped out, right? Because the thing is this: once it's not like someone stealing cash, right? You can probably find the cash in bundles, or it will get recirculated into the system. You can trace it back, right? Most of the time you can trace it back. But with bitcoins, because it's anonymous, if someone steals, it's very difficult to trace. And also, if let's say some coding issue happens and then the coins get lost, right? Like some bug or virus goes in and the database gets wiped out. For instance, now let's say your bank database gets wiped out, you have backups, that's one thing, but the counter record is there with the central bank, right? So we there is a counter record. Now here it isn't like that. It's a privately running system. So when the system gets wiped out, it just disappears. It's just gone, like someone pressing the delete button, like control all delete basically. So that's another risk, right? And in South Korea in 2017, one of the exchanges were hacked twice, right? And they finally filed for bankruptcy. So these are some of the issues. Of course, now I think digital wallets, they're increasing security and all of those things, but these risks are there because as one side, when security is increased, the hackers, they also increase their sophistication. So these are always, these risks are always there. So you can, if you want, you can just search cryptocurrency exchange hacks or crashes or losses. You will get a lot of like high value losses that you don't see in the banking industry. You don't see losses to that values in the banking industry. So interestingly, I went on this training to Japan on virtual currencies, and the Japanese regulator was saying, you know, we didn't realize how much money there was in cryptocurrencies until one of their exchanges, not this one, another exchange was also cracked. When the people lost their money and the exchange owners had enough money to repay these billions of dollars, they had enough money to repay. So that means they were so rich just by having an exchange. So there's so much money coming in to these exchanges. But of course, the volatility, just the way you make money, you can lose money. So it's very, very high risk. So in 2018, we issued a public awareness press release on this. I think some of you may have known, banks also were waiting for this. And what we did was we warned the public. Let me see if I can get the message. Let me see if I can. Right. So this was the right. So this was. Can you see my screen? Can you see the PDF that I have?
Yes, madam. Yes.
Okay. Right. So in this one, this was in 2018. So it's now 2 years since we published this, and we were also one of the early countries to publish this because we realized this is an issue. The money was getting sent abroad, and also locally there were a lot of sort of scams, and people didn't know what they were putting their money into, but the scammers were promising all sorts of money to people. So we at that time we told them, okay, there is a high risk involved, and due to this, because it's speculation, there is no underlying there's no underlying value, and there is no authority guaranteeing its value. Like the central bank guarantees the value of the rupee, there's no authority guaranteeing the value of a cryptocurrency. It's just your money is just going to a private developer, right? That's all. And so due to the volatility, there is also a high ability for these currencies to be used for money laundering, right? And so we said that as there are significant risks, that we are warning the users not to use them, and that the central bank has not given any license or authorization to anyone right? Because there were people saying, oh, we are licensed by the central bank. We're like, no, there's no one like that, because we haven't. And we didn't authorize any initial coin offerings. Do you know what an initial coin offering is? An initial coin offering is, now what happened with Bitcoin, all of the now every instrument it transforms with time, right? It gets more sophisticated. People find different uses. Like what the opponent was saying, before they did their frauds with accounts, then they started using credit cards, debit cards. Like the same way, they're very versatile. They're very innovative. So though Bitcoin was initially introduced as a possible alternative currency to central bank money, then it soon became an investment instrument, right? So then companies started having like initial like IPOs, having ICOs, right? So what they were doing was, let's say companies to get like capital for their whatever other businesses, they would have coin offerings, and people would just buy these coins, right, for no reason, right? They are not getting an ownership of the company. They are just putting money into the company, and then these coins have to be traded in the open cryptocurrency markets, in the exchange. So if no one is going to buy, then you just lost your money, right? So they're very risky in that way. Like you've just handed over some money to a stranger with the hope that someone will buy this digital token that you have now acquired, right? So these are coin offerings, and we know that many companies have tried to do this coin offering. Some perhaps have already done it, but there was no legal specific law saying you can't do it, right? So unless we can prove there is KYC issues or something like that, not KYC, sorry, AML or CFT issues or some obvious fraud, there was no way to regulate it. But people have to then, if there is no regulation, then market rules apply, right? Buyer beware, right? People have to take care of themselves. People have to use their brains. Because they can't errantly behave and then expect the regulator to take care of them when they are irresponsibly behaving with their money, right? So general rules were applying, right? General common sense rules. But now we did a comprehensive study on this, and we have started issuing regulations related to to this. And few days ago we made it illegal. The foreign exchange department said that you can't buy virtual currencies with credit cards, right? With payment cards, or with payment cards. You can't use payment cards, because we found that one of the main ways that people buy these from these foreign exchanges is using cards. So they very clearly said, now you can't use your payment card to buy cryptocurrencies, right? Virtual currencies. So that is, and also you can't use it. You can't. It is also not an allowed. For foreign exchange, for foreign investment, where you can buy stocks and shares and debentures. Now you only have an allowed list, and virtual currencies are not in that allowed list. So from that angle also, you can't. Sri Lankans can't purchase virtual currencies. So if anyone calls you, that is where the law stands. Have you all been branch managers, any of you compliance people, have you been getting calls relating to buying Bitcoin or virtual exchanges or anything like that?
Not like that, but people have asked for PayPal only, not for Bitcoin and other things.
Okay. Anyone else?
Not from us.
Okay, right. So we saw that some of the banks, after our press release in 2018, they had already started limiting the use of bank channels when they can find out, because sometimes you can't even find out because it's going under some other name. You know, they will say, oh, ABC Hotel, but actually it's selling bitcoins. So there are a lot of scams, and recently also there are scams where they try to show that, oh, central bank has approved, they will use some other press releases, and because people, anything to make some extra money, they are happy. It's only when they lose their money they come running to us. Until they get money from whichever way, they are happy. So that's why we are constantly, but there are a lot of people who also call and ask whether it is okay, because they themselves find the model a little problematic, because sometimes it is like a pyramid scheme. Then when people do call, it's, we can explain, but others are running at their own risk. Now, with regards to PayPal, the apparent, is it about access to PayPal that they're asking?
Yes, to get credits.
Right. So, and what is the answer that you give them, the apparent?
It's all no's now, because central bank still not allowed to get credits now.
Okay, so that is the wrong answer.
No,
Okay.
not. But last year they gave for as long.
No. So with PayPal, you can. That the reason I asked you for the answer that you give is not to tell you whether the answer is right or wrong, because we know that a lot of people are confused with what is the right answer, right? So, not that I wanted to say that your answer is wrong, but this is a common answer. But the answer that you gave is a common answer, that a common mistake that a lot of people are making. Now, central bank, there is nothing preventing PayPal from coming to Sri Lanka, right? PayPal is not coming to Sri Lanka. Now, remember, when we were discussing KYC, the compliance regulations, that's why I kind of indirectly gave that example. I didn't mention PayPal there, but that when companies come, it is a business decision, because they have a lot of costs, including compliance to local regulations, which is very costly, especially FIU, this AML and CFT regulations. Every country has the same regulations, right? But when you have to, but for each country there is a cost, right? And then at the same time, in other, now in Sri Lanka, the business e-commerce side is still not very developed, right? It's very weak. Now I shop online, I know that it is very weak, and the people are still not using it properly. Therefore, the companies don't give a good service, and then therefore people don't return to e-commerce. So it's, even with COVID, it is still very weak. So they don't have the business numbers to come. So it is a business decision, and PayPal has not come. Central bank has asked them several times to come because it is a need of the market, and a lot of people, especially these private software developers and all of them, they ask a lot. And we have asked, now these are all public knowledge. We have publicly stated these things. So it is nothing that the central bank has not allowed, right? It's just that PayPal has not started operations in Sri Lanka, like just the way, I don't know, Marks and Spencer of England have not started operations in Sri Lanka, though they have operations in Dubai and Europe and all over the world, right? So it's the same thing. So it is a foreign business that has still not come to Sri Lanka. That is the long and short of it, right? Did I make sense?
Yes.
Yes. So that is the situation. A lot of people, we get very frustrated when people say central bank is not allowed, because the central bank has gone to great lengths to try to get invite PayPal more than it generally does because of the need. But it's a business decision for them, and they're still not operating. I mean, that's the reason. So right. So we have any questions so far? We have reached the end of the main presentation. So I spent some time on data protection and virtual currencies, because as I said, these are the things that are coming up. These are the latest laws and latest legal issues that banks are going to face, and actually with already facing, especially with virtual currencies and with data protection. If you're having, if you're having Sorry, I had gone offline. Very sorry about that. Where did I stop talking to you? Can you hear me?
Yes, I think soon after.
Yes.
Soon after the cryptocurrency and the.
This one, did you see this one? Yes.
Yes.
Okay. Did you see this one?
No, after data protection and the cryptocurrency.
Okay, right. So, because I spoke to Dapper and last I got his answer. So after
Yeah,
that,
yeah.
I fell off. Is it? I'm so sorry. I've
Yeah.
been talking to myself and wondering why no one is responding. Because I can't, once I start sharing, I can't see what my status is. And what was I going to say? Yes, so this is I don't know whether you were there. If you have, my question was how important is data protection to the payments industry as we go forward? Any thoughts on that one? And if in your experience, if there are any things that you think we should have, as I think this is a better way to discuss this. Any ideas? So if you have no sort of views on this one, the reason I ask this is because, we are the ones who draft the regulations and the circulars and directions, right? So if you all have any ideas like that, and when you think, okay, when I'm doing something, if there was a regulation, it's easier, anything like that, then we can see, okay, is there a problem in the market that needs some regulatory help, or can it sort itself out on its own? So yeah, if you even in the next lectures, if you have this idea, please share your views with us. For the assessment, I will focus on mainly on these, not so much on so I will focus more on data protection, virtual currency, because they are new areas, and I think that most of you already know these existing laws quite well. There might be sort of an easier question with sort of like like a smaller question, but more focus on data protection and virtual currency, mainly because I think this is very, very important going forward for us to know, because we are so used to learning the existing laws, and the existing laws are now also responding to these changes, right? Yeah, so Diaphren, is Diaphren still there? No, he's left, I think. So Diaphren is to make a presentation to us next week. If there are no other questions, we will stop for today then. Right, thank you very much.
Thank you, ma'am.
Thank you, madam.